In today's video, we're going to have a look at US unemployment claims overnight. We're also going to have a quick look at what Dalio, or at least Bridgewater Associates, have said, and what Goldman Sachs' warning has been, and a few other little things along the way leading into the Friday to give you something to think about. Hello and welcome to another HCY Securities Market Update. My name is Alistair Schultz and I'm going to be your host through today's trading journey. The first thing to have a look at today is really about the unemployment claims we've seen overnight. Naturally, there's been a lot of media coverage of this over the last couple of weeks or even the last couple of months. Now, it is an important figure, and last night we saw 1.5 million claims, which is a little bit higher than what the expected or the forecast was at 1.3 million. Now, regardless of that matter, it's the 13th consecutive week of unemployment claims remaining above 1 million. Now, above this, we've also got the record broken from 1982. So the claims are still sitting well above what we have as previous history to say that it is the highest on record for unemployment claims consecutively. Now, in addition to that, we're still thinking, and a lot of analysts are looking at the idea, including the Reserve Bank of America, or the Federal Bank of America, saying that unemployment is expected to remain at about 9% towards the end of the year. So hopefully that isn't the case, but the chances are it is likely to be. Now, moving on from that, we've also had some news that's come from President Trump. Now, he has been, as usual, controversial, as he always is, and he has said that he thinks that a decoupling from China's economy is still an option. Now, manufacturing probably going to happen anyway. They're going to try and reshore that as much as possible, and that's been his whole intent the whole way through his presidency. The supply chain side of things, not so maybe. It might happen, it might not. I doubt it's likely going to be a feasible solution, but to then decouple the entire economy, I don't think that's something that's really achievable in this day and age. We're also globalized at this point in time that cutting off something so significant would mean that you would have a lot of production loss. Now, moving on from that today, we've also had some news come out from Dalio, and this is going on with the idea of the globalization. It hasn't been Dalio directly, but it's been his company, Bridgewater Associates. Now, he has basically said that globalization has driven the developed world for the last decade. And that is not something that is surprising. We know that he has said that before. But what Bridgewater Associates have said today is that they are expecting it to have a shift on equities. And they have left a little bit of a warning here for us. Looking at the idea of what's going on with the US-China conflict, of course the pandemic itself, and how much demand has really dropped down. And he's seeing that there's this idea of countries wanting to reshore, bring some of the produce or the export market back home, so that way they are not anywhere near as dependent on other countries. Now, this isn't surprising either, but what is surprising is he's saying that it is likely going to affect equity markets in the US, where the cost of goods is likely going to rise. Now, this is something that we probably would have known already, but maybe hadn't really considered. And he makes a very valid point, or at least Bridgewater Associates makes a very valid point. Furthering to this, we've also heard from Goldman Sachs. Now, Goldman Sachs have issued a little bit of a warning of their own relating to US stocks, and that is that there is a high chance of them having, of any entity or company that has a high sales exposure in China running into problems. And they cite that the reasons for this is the rising tensions between the US and China. Naturally, if we were to have a decoupling of both of those US economies, then you would see a pretty dramatic drop in stock markets. But some of the things that he's really focusing on here, or Goldman Sachs is really focusing on here, is the idea of some of those entities that might have retail fronts and have that exposure sitting there, such as Apple, who do have a roughly 30% amount of their sales coming derived from China. Now, that could cause a problem in the future, but for now, it's just something to think about coming into the weekend. And of course, usually when Trump says something, you have to take it with a grain of salt. So we don't know if there really is going to be a decoupling here of their economies, and it may not ever come to fruition, but it's definitely something to keep in mind if it does. Now, moving on from this, I do have something I need to say about Hertz, because I've had a couple of questions over the last sort of week or two about this company. Now, the most important factor here is that people tend to be asking, should I be getting into this? Should I be buying into this? And I will not fundamentally tell you really a stock that I do like, but I will happily tell you one that I hate. And this is one that I hate. The reason for this is equity holders of bankrupt companies get paid last. So let me say that again. Equity holders of bankrupt companies get paid last. So that's if you ever get paid. The idea is here that they have their other liabilities that come out first, and anyone who is a shareholder at the time, particularly if you're just on the common stock side of things, you won't actually get a payout. The likelihood will be that the money will be burnt up going and paying off their other debts before it gets to you. And there has been a lot of people that have been speculating on this. I have no issue with making a profit, and if you were getting into this to try and make a quick buck, congratulations, you've done quite well for yourself. But if you are left holding this position at the end of the day, it's kind of like the hot potato. You don't want to hang on to it. You're going to keep passing it along, and eventually whoever is caught out holding onto that potato is likely going to be losing their investment on this one. So please be careful with what you're doing, especially when it comes to Hertz. Now, the next one to go into, and I thought this one was a little bit funny, it's a new ETF that has been established. It is tracking all of the testing and advancements going towards infectious diseases. So naturally, we would firstly think of COVID-19, and there have been a variety of other ones. Now, it is the ETF MG, Treatments, Testing and Advancements ETF, if you wanted to look it up. And the ticker code for it, and this is the part that I enjoy, is GERM, G-E-R-M. Now, that is definitely something to keep an eye on. I think it's worth it because it might give us a little bit of a area that we can put all of those companies in one basket and keep an eye on what's really happening with them as opposed to having to separately do it. Now, there is another ticker that does give you something kind of similar, and that is the BioThreat ETF, and that was started earlier in the year, and the ticker code for that is VIRS. Both of them are exchange-traded funds. They do monitor everything that is sort of going on there, but it's probably worth having a look anyway. I think it's just something nice and neat to have and pretty cool to have a look at anyway, especially with a funny ticker like that. Now, the next one to have a look at here today is the news that we have tonight. Now, we have Australian retail sales, United Kingdom retail sales, Eurozone economic summits are going to be occurring today, and of course, Canadian retail sales on top of all of that as well. There is also likely to be some talk on Canadian unemployment, so keep an eye out on that if you are going to be trading late into the session, particularly in the US session. But other than that, that's really all I have for you today. If you have got any questions from anything I've covered today or perhaps some of my other videos, please feel free to shoot me an email at talktoal@acy.com. And of course, don't forget to like and subscribe to this video so you get more great content from me and ACY Securities in the future. Have a great trading day ahead.